All right, team, we are going to drill down today on the top things to do before you buy a home. Now, these are my best tips, tricks, hacks from over 22 years of experience. I'm going to share with you everything that I think is super crucial to know. Some things will fold under certain banners, and we'll go through that when the time comes. But I want to just throw this in there. Hey, getting lots of questions on a regular basis. People who've never bought a home before, people who've bought homes before. It's always good to get refreshed on some tips. So top tips we're going to go through today. When to get pre-approved. Paying down your credit cards. When should you do that? How should you do that? Do I need to season or transfer funds from here or there? Avoiding new purchases. I'm going to give you specifics around all these. Shop around later versus in the process versus up front. A lot of people try to shop around early in their pre-approval process from all these different lenders. That's really a headache. You don't really need to do that. I'll show you a better way to go about that. All right. So when to get pre-approval? Anytime. Just keep in mind, you can get pre-approved anytime. There's no consequence. There's no cost. There is no downside. I'll show you later that it won't hurt your credit score. I have proof. I can show it to you. I do it all the time. I pull people's credit. It's the same as it was with the other lender. So there's no downside. So you can really do it anytime. Now, if you are keeping track of things well and you kind of know your finances and you're just like, well, we just don't want to have to refresh documents. Okay, well, then when you're about 90 to 120 days out from wanting to be in a home, that would be the ideal time frame to go ahead and get your pre-approval. That's assuming that you're sort of monitoring things. You already know your credit and so forth, which, is something that a lot of people will do. And it's good. You should, monitor your credit, keep an eye on those things. And if you know where you stand, then great. This can be refreshed very easily, though. So I just want to make you aware of that. It never hurts to go ahead and get pre-approved, even if you're 6 months out, even if you're a year out, because all you have to do is update documents. And updating documents is not difficult to do. So the idea that this pre-approval is going to expire and fall off a cliff, and then you will never be able to be pre-approved again, you don't have to worry about that. That's just not how it works. I would recommend Credit Karma. And a lot of people use different apps. Experian has an app. That's great. These apps are not going to be 100% accurate, okay, as far as your credit score is concerned, but they will show you approximately where you are, and they will notify you when your score goes down or when your score goes up, so you can at least have an idea what's going on. If something comes on there and knocks your score down, you're going to want to know that. This is a helpful tool to be able to see that, even if the exact score it's telling you is not your correct score for mortgage. Whatever you do, when you get pre-approved, do it before you look at homes. This is important. Whenever you go to look at a home, invariably you're going to find one that you love, especially if you haven't gotten pre-approved yet and you're just tire kicking or just seeing what's out there. You're going to find something that you absolutely love and have to have. You put yourself at a serious disadvantage at that point because the other buyers looking at that house are already pre-approved. They already have proof of funds. They already have DU approval. They have everything ready to go, locked and loaded to present an offer that's stacked. It's going to look way better than yours. So just do it before you look at homes. It's one rule, simple, makes sense, right? Just do that and trust me on that. It will make your life a lot easier. Okay, let's get to some tips. So specifically paying down credit cards. A lot of people know that when paying down your credit card balances will help improve your credit score. But to what extent should you pay them down and when should you do it? I know this very, very well. In my years as a credit repair professional, certified credit expert, and my own study that I did on the credit scoring model, it shows you here, they give us on your mix of credit, your payment history is worth 35%. Okay. It's worth 35% of your credit score. 30% is based on the amounts that you owe versus what the limits are. Isn't that crazy? So almost as important as your payment history for your credit score is the amount that you currently owe versus what your credit limit is for those items. So that's pretty wild, right? It's a huge, huge factor. So what do we do with this information if we know this to be true? Well, there's some tiers here that I want you to be aware of. 30%, 50%, and 70%. In my own studies, I could not find a difference really being made outside of that. You will see other things online if you look at it. If you talk to different credit people, they will tell you maybe some different things. But these are the tiers that I've seen personally make a difference. So if you owe less than 30% of the credit limit, then we're talking about credit cards here, less than 30% of the limit on the credit card, that's a good place to be. Of course, 0 is ideal. But I'll talk about that in a second. You want to be under 50%. You really want to be under 50%, but you definitely want to be under 70%. if you are at the limit or over the limit, you get penalized a lot for this. And the way the scoring model, the way that credit bureaus and the credit card companies have sort of collaborated on this to help keep your credit score low is pretty mind-boggling. But I'm going to show you the hack right now, how you can beat it just by knowing how they're playing the game. This timing is super important here, whether you're just paying it down or whether you're paying it off, doesn't matter. So here's the first thing you need to do. With each credit card, you need to make note of your statement ending date. You can go back at an old statement. It'll show it on there. Hey, this is from statement period from this date to this date. Usually it's the same date of the month. So it'll be like the 18th, 20th, the 6th, whatever. Your statement is going to end on the 6th every month. And so on the 7th, what happens is they send the information to the credit bureau saying, here's how much they owe, here's how much the credit limit is. At the same time, they're sending you the bill. So if you take that and you go and you pay it off, guess what? Credit bureau doesn't even know. Credit bureau will never know unless it stays paid off until the next statement ending date. Credit bureau will never know that you paid it off. They only know the snapshot that is taken by your statement ending date. That's all the credit bureau knows. This is all done on purpose, by the way. It's by design to keep your scores lower than they should be. So all you have to do is pay a few days before that. So if your statement ending date is the 6th, then you just make your payment on the 3rd or the 2nd, whatever. Just make your payment ahead of the statement ending date. And then by the time the statement ending date comes and your statement closes, the information will be accurate when it is sent to the credit bureaus and is scored for your credit model. This is, of course, pay off your credit cards if you can, all right? But also keep in mind that cash is king, especially in a tough, seller's market. Having access to cash, being able to, use appraisal gaps, being able to put money down or pay for things, buy your rate down, whatever. There's so many different things that money can be used for inside a real estate transaction to not just help you get the deal accepted, but also to help you make a more efficient financing structure. So you have to be careful with this. This is where, I can help advise you a lot. If it is the case, you're getting pre-approved and you say, you know what, I want to put money towards my credit cards. I'm just not sure how much I can safely do that with and still have the reserves that I want to be as strong as possible as a buyer. So that's something where it's got to be case by case. I can't give you blanket information on that, but if possible, then you can pay these off. That will help improve your credit score the most. Okay. We having fun yet? All right. So seasoning and transferring of funds. A lot of people will say, hey, I have cash in a safe, or I have cash in a shoebox, or I have cash in, the safe deposit box, or I have gold bars. Okay. It's tucked away somewhere. How are we going to use that? Can we use that? Can I sell those things and use it? Sure, you can. You definitely can, depending upon what it is. Usually it's mattress money. Usually people say, hey, I have cash. It's not in the bank, and I want to use that as part of my down payment. You can. There's basically two ways you can do it. We need 2 months of bank statements showing no large deposits, meaning you put the money in your bank, and then you have 2 complete bank statement cycles go by without that being on there. So you're going to make the deposit. The current statement that you're in at that time is going to show the large deposit. The next 2 statements, and then you can proceed. Or there's a hack here. The hack here is you could have a family member give it to you as a gift. It's cash. As far as the loan goes, we don't know whose it is. You could just hand it over to your brother, sister, mother, uncle, whatever, and say, here, I'm going to give you this money, put it in your bank, and then I'm going to have you do a gift letter. You're going to gift it to me for my purchase. Now, talk to your CPA about potential tax consequences or whatever may be involved there. From the mortgage side, we're not reporting anything or communicating with tax agencies, but always check and be mindful of those things. So that's the workaround. And I've seen people do this where they have hundreds of thousands of dollars in cash just not deposited in a bank. And so it can be problematic. Crypto assets has become a big one. Okay, hey, I have crypto assets. I had a gentleman do a loan with us who had 200 Bitcoins in a non-custodial wallet, and it was worth millions and millions of dollars. I think at the time it was worth like $12 million or something like that. And he was buying a house for 1.1. So, or 1.6. And so he could easily afford it, but his crypto assets were in a non-custodial wallet, meaning that there's no statements. So if you want to be able to use crypto assets, they're going to have to either have been in a custodial scenario, meaning like on Coinbase or someplace where you get statements, or you kind of revert back to, okay, well, I liquidate them, give the money to a family, and go that route with the gift. So those are kind of the two options with crypto assets. Or you could also liquidate them, put them in the bank, so you can kind of have the same options there. Put them in the bank, 2 months, no large deposits, and then you're good to go. So those are things to keep in mind. And if you do have gift funds coming in from a family member or, something along those lines, just go ahead and, don't tell them that to send you the money ahead of time. Wait to transfer it. Okay. All we need is a letter from them saying, hey, I'm going to provide this much money, for this person for their home purchase. That's all that's needed up front. They can wait to transfer the money until actually close of escrow. And I would highly recommend this for multiple reasons. Number one is much less paperwork that way. Number two, it doesn't get weird if you cancel and you have to give the money back to them or whatever, or, it feels strange. They've given you all this money, it's just sitting in your account and you haven't bought the house yet. You don't have to deal with any of that. So easier for everyone involved. If you wait to do the transfer, they can transfer it directly to escrow. You don't even have to touch it. We can just transfer it direct. Much less paperwork that way. So highly recommend. Going to do gift funds, do it that way. Okay, so there's some money stuff for you. Avoid new purchases and debt. I think a lot of people know this. Hold off on the new car. Toys. Hey, I've been wanting to trade my old, beater truck in for a brand new Ford F-150. Hold off on that if you can. It'll prove very helpful for you if you can hold off on doing that. Toys meaning, toys meaning jet skis and stuff like that, boats. Hold off on that stuff, okay? Just hold off. Wait until after you buy, and then you can do whatever you want. Also, be careful on this one. Hold off on co-signing. Co-signing is the same as signing. So if you are co-signing for, your son, daughter, niece, nephew, whatever, and, you're like, oh, well, I'm just co-signing, so it doesn't affect me. It actually does. It actually does. Until you have a year's worth of proof that a loan that you co-signed for is being paid for by someone else. You need 12 months of proof. Until then, you're on the hook for it. So if you have co-signed for someone, but it's been 12 or more months and we can get documentation showing that they're the ones making the payment, then you're okay. We can negate that liability. One thing that you can do, and this is a tip going the other direction, if you already have, Derrick, what if I already have a new car with a big payment? What if I already have toys? This is a good time to take a look at refinancing those things. We do this sometimes inside of transactions or at pre-approval when someone doesn't quite qualify for what they want to, but they have a $900 a month car payment. They can refi to a $550 a month car payment and open up $100,000 of purchasing power. So, if you want to maximize your purchasing power, if that's important to you or it's a big part of your story, then refinance your cars and your boats and whatever to the lowest possible payment or sell them. I've seen people do that too. You know what? Hey, I've been meaning to sell this boat forever anyway, or I've been meaning to get rid of this timeshare anyway. Go ahead and get rid of it. Yeah, just get rid of it. You sell it, get rid of it, you get rid of that payment, and it will increase your purchasing power about $10,000 per $50 a month that you're paying. So if you're paying $250 a month for something, that's going to increase your purchasing power about $50,000. So that's an easy way to sort of help yourself on the debt side of things. Just keep in mind, every inquiry will need an explanation from underwriting. So every inquiry, that's relatively recent is going to need an explanation from underwriting. They're going to say, hey, what is this? Did you get any new credit as a result of this? So just know that going into it's okay. You can still get inquiries. You can still go sign up for the Lowe's card and, save 10% on your purchase if you want to, but know that credit inquiry could potentially hurt your score. Getting a new Lowe's card probably isn't going to change your pre-approval, but it's something you should call your loan officer about immediately and say, hey, is it okay for me to do this? And I get those calls all the time, and I always applaud, give huge rounds of applause for clients that do that know, okay, hey, I need to check with my guy before I do something like this because I don't want to have it really go against me and cause them to go, wait a minute, it's all over. This ain't going to work, and blow the whole thing up. So shopping around for a loan later. Listen, shop around for a loan later in the process. Get pre-approved initially. If you don't like your pre-approval If you think, you know what, gosh, I'm pre-approved for 575,000. That's really not enough. I really need more like 700 to find a place that I like. Then okay, shop around. See, a lot of people. I just pre-approved someone this morning who was pre-approved with 3 other lenders. One of them pre-approved him for 800,000, and the other 2 approved him for 550,000. I approved him for 900,000, and I had the lowest rate, and of course we have no fees. So when you are shopping around for a loan, you can do it up front if you want to. And sometimes you'll find a lot of things out when you do that. But if you want to do it later in the process as well, when you get closer to really looking at a lot of homes, check in with some different people. The whole point of doing it would be to be pre-approved with 3 or 4 places and kind of check in on rates and so forth when you get closer to the time. Because although someone may have a better rate than someone else today, it doesn't mean that they will 2 months from now when you get an escrow. So you need to kind of keep options open. And you can do all that towards the end of the process if you want to. That would be my suggestion, because doing it too much up front, now you have 5 different people following up with you for 2 months. That's going to be a little bit annoying for you. Trust me. It won't hurt your credit score, okay? This is a huge myth. It will maybe never be dispelled. I will do everything I can to dispel this, but it will not hurt your credit score. Here's the proof. Okay. This is from Experian.com. It's their blog. You can Google "Are mortgage inquiries hurting my credit score?" and you will pull up this blog. And the key thing to note here is that it says the newest scoring systems from FICO and VantageScore, which I'm pretty sure every mortgage company is using FICO. I don't know of anyone that's using VantageScore, but maybe there are some out there, but FICO for sure will omit the inquiries for mortgage applications. Omit, meaning they're going to show up on your credit report just like a hard inquiry would. It's going to show up on there, but then it's going to be omitted from the scoring model. So it will omit it. It will not count it against you. And this means you can shop around for the best rates and terms for your loan without being penalized. This blog is from 2019. So it's been this way for a long time. And I have a feeling it's been this way for years prior to that, because I've noticed it myself just in pulling lots of different credit reports. But it's something that a lot of people think, oh, well, if I get my credit pulled, it's gonna hurt my score. And that's true for a lot of different things, but not for mortgages. They have opened it up, and that was through tremendous lobbying efforts on behalf of consumers. You can also see the video, how to shop for a home loan. So I put that on there so you can do it later. You want to shop for a home loan, just look for that video on my channel. And I've done a couple of them, maybe 2 or 3 of them over the years. They're all good, and they're all more detailed than the previous one. So look for the most recent one. Okay, let's go through some reminders here today before we close up shop. Pay down credit cards as much as possible, but use the right timing to maximize. Remember, pay before the statement ending date, a few days at least. All right. And don't spend too much on this. Don't put all of your money towards this just to get a high credit score and then not have money for a down payment, etc. Some people will say, hey, how do you save for a down payment? Why aren't you talking about that? Well, if you haven't been saving, you have no down payment, you're going to find that out pretty quickly in the pre-approval process, what you need to do. Or you could get a gift. So that's not really something that people save in their own ways, whatnot. I'm not going to talk about that in generalizations. Okay, season or transfer funds such as crypto, but do not transfer gift funds yet. So season or transfer or set up a gift scenario. But if it is going to be a gift scenario, you don't need to transfer the gift yet. Of course, you can. If it's your money, if it's your cash, you're giving it to your brother who's going to gift it to you, you can go ahead and have him transfer it to you. But we still have to get a gift letter to make it work. Here's a twofer: avoid new purchases and shop for a loan later in the process. Follow those things. I'm telling you, you will have a much better experience. You'll be good to go. Of course, if you always, if you want to get started, whether you want to buy, whether you want to refi, go to DerrickEvans.com and you can get your account set up and started right there. You can do your application in 10, 12 minutes, upload your income documents. We can get you pre-approved very quickly and easily from that point in time. Of course, I'm always available. Call, text me, email me. If you need me, that is what I'm here for. I'm happy to help. I love what I do. I love helping people make good decisions, especially big decisions, especially that involve a lot of money. And that's exactly what this is. And maybe that's why it's such a good fit for me. If you need me, I'll be here. Have a great day, and I'll see y'all soon.